again. We outside again. we at we we at our we at our winter home. We at our winter home this weekend out in the tropics. We outside again. Ain't that what they say, we outside? What's going on, man? I appreciate whoever pulling up. I appreciate y'all. I am awake, fella. We outside again. What's up, man? What's up with everybody who pulled up? I hope y'all have a vainglorious Saturday. I'm gonna go ahead and get into it. I ain't gonna waste a whole lot of time. I appreciate y'all pulling up. Of course, here to learn and shares in here. Of course, here to learn and shares in here. Tim calls me Robinson is in here. What's up, man? What's up, Pamela? What's up, Divadio? What's going on, fine and super, man? What's up, man? I appreciate y'all for pulling up. We gonna keep it simple, man. We just gonna look at the price action from the week, a little price action review. Hopefully we got us some better outside sounds. Hopefully it don't sound like we in the Amazon this week. Hopefully it don't sound like we last time it sounded like we was in the Amazon. We had cicadas and everything going on. Let me get my screen together. Let me get my screen together. Y'all hold on real quick. Oh, okay. All right. Okay. All right. I jollipies, y'all. I'm back. Let's get to it, man. Let's get to it. We're gonna jump right into it. Like I say, just go through my normal routine that I normally do on Saturdays. Just sit down and just walk back through the price action for the week and see if I missed anything, or see what I saw, if what I saw was right. Um, like we had said yesterday, was talking about we finally got the move that we wanted to get last week. Let's see, Friday, Thursday, Wednesday. Okay, Friday, Thursday, Wednesday, Tuesday, Monday. So Monday and Tuesday we went up and we dropped. We wanted this move right here last week, but last week we end up getting this move here, right? We came down, slid to the right, came make the move, waited on the news, right? So I was hoping we got this move last week, but we got it this week. So that's fine. Y'all know little Timmy Rogers be early to the party a lot of times. I be seeing things, I be like, hey, and then news come in. News trumps charts. You know what I'm saying? News trumps charts. We saw that last week. We wanted to come down here and get this, but news trumps charts. Now, bear in mind with seasonality right now, the market is playing out to seasonality. It like is playing out perfectly with seasonality, right? This the beginning of December right here. And shout out my financial advisor Dustin. I wish I should have took a screenshot of that. I gotta go watch Black Chicago Be Like Part 105, Part 113. Part 13. I gotta go watch that. That dropped 2 days ago. I'm slipping. Let me see. I can't remember exactly what day he posted that on. But before we get into it, I want to look at that real quick. It was one of those videos. Uh, man, I ain't been looking at none of Dustin videos. I've been slipping. Uh, Baddie China stock market react. I can't remember when that was. It was on one of my lives too. It was on one of my lives too. Oh well, but anyway, he had did a live. I mean, he had did a slide where he was showing the exact performance of every day of December over the last 40 years for the S&P and the curve. The curve was like, stretch it out here, just get it to just December, just only December, right? So just for December, and it was like sell off in the beginning of the month and then rally at the end of the month, right? Like the beginning of December, like you got December first right there, second. See how we start December off, go up, come down, and then Santa rally. So it's playing out right along with history right now so far, right? We come in, you know what I'm saying, in the beginning, first 2 weeks, and then taper off right in the middle, right? And then Santa rally is playing out right to historical statistics, if you will. Right. So with that being said, we still got bullish price action so far, right? We still got bullish price action so far. We do got, relative equal lows on the daily here, on the bottom side of this order block and on the bottom side of this mitigation block right here. We hit the mitigation block and pushed up a little bit, just going off of PIMDAS, right? Going off PIMDAS, coming down the mitigation block. It hit the mitigation block. We got a mitigation block and an order block. So I'm going with PIMDAS first. So I'm going to say it's reacting off the mitigation block with this little slight move up right here on the daily. Y'all see me, my mouse over here and I'm moving, but my eyes are actually looking over here. So we hit this mitigation block and backed up off of it just a little bit, right? After coming up, we took our buy side, went up, took our buy side liquidity on Tuesday, right? Came down, took out sell side liquidity on Thursday. Then Friday, we sell side liquidity on Thursday, slight reaction, right? After we came down to this fair value gap, took out sell side, came to fair value gap, right? Pushed up slightly, right? And then came back down into the mitigation block and reacted off of it right there, right? So now we still got an order block over here by the mitigation block because I'm counting the mitigation block out because of PIMDAS, right? So now, what I would love to see is just maybe a slight reaction down, then a push up, or I'll take full steam ahead push up, right? What I don't want to see is a reaction up to this fair value gap, to this breaker, and then a hard sell-off. That will be counterproductive to the Santa rally. The Santa rally needs a slight reaction down, very slight, and then a blast off, or just a blast off. That's what the Santa rally need to come up and attack this buy side liquidity above this 4207. That's the buy side liquidity we've been hunting since October 13th. The hunt for red October. Since October 13th, we've been hunting that buy side above 4207 over there. So that's what we really need to get into. That ain't what I came up here to talk about, but that's what ended up spewing out. Let me turn on. I got it on. Okay, it's turned on. I'm turning on my DR and IDR, and then we're gonna drop down to let's see how far. Let's go down to okay. What was Monday's date? Monday was the 12th. I sure wish it was a way to keep these ads off my screen without paying for it. The 12th. Monday the 12th, right here. There's the 12th. I guess I could have just went from the 12th. Well, look at here. Oh, I'm going the wrong way. I'm like, why I can't find it? Because I'm going the wrong way. Okay. With the 15, I got 15 minutes. Why is this on 1 minute? I could have swore I picked 15 minutes. What did the 1 minute come? Did it change that by itself? Did it change that to 1 minute by itself? Okay, 15 minutes now. Man, I'm trying to figure out why I changed that like that. Okay. All right. So on Monday, these 15-minute candles, I'm going back to I set it back to the midnight, and then we gonna look at the Asian and the London and New York, because I don't really pay attention to the Asian like that for real. But since we're looking at the IDR, I will put it in the scope of things. Since we're looking at the IDR, I will put it in the scope of things to see if it's respecting that too. So this is the ADR, the one that goes throughout the Sydney and the Asian, right? And first thing I see for Sunday night and Monday, I see that the DR and IDRs are respecting each other. All of them giving the same look. All of them giving a buy. Starting out on Monday, I can see the first thing I see is all of them, supported each other with the buy, right? So now I'm going to ignore the Asian because I don't do anything with it. Don't trade it. Don't do anything with it. So I'm going to ignore it now. Then we're going to drop in and look at the ICT concepts. Since the DR and the ADR work off of 5-minute time frames, I think I'm gonna look at the price action based off of 5 minutes. Did it go back to the end again? What date is this? 15th? No, it didn't. It just moved over. Yeah, it moved. Why doesn't it stay where I had it at? Monday the 12th. Monday the 12th. Why doesn't it? Stay where I want. Okay. 11. Right there. Why doesn't it stay where I want it to stay? Do anybody know if there's a way to make it stay where it is once you click the once you change the time frame? Do anybody know if there's a way to make Trading View stay at that space right there? Do anybody know if it's the way to make it stay? Like when I change the time frame to stop it from jumping back to the end. Do anybody know how to make it stay? Is there a way to make it stay? I'm looking at the chat. Let me do this right here. Bring this over here. Shrink this down. Put the chat. You can use bar replay to make it stay at point. Oh, but on bar replay, that's when it's like going through the time, like rolling through the time. It ain't it like everything don't be there. It like print. God dog it. Everything prints like it like doing like playback, like it's bar replay. That's like doing like playback in Ninja Trader where you can put it at a certain time, and then when you change the time frame, it just stay in that time. How do you do that? How do you do? Where's bar? Yeah, where's bar replay at? Man, somebody click the thing and talk. Somebody click on the link. Somebody click on the link and talk. It's the delay with the typing is driving me crazy. One of y'all, Robinson, here to learn the share. One of y'all click on the link and tell me how to do it. Click on the link and pull up and tell me how to do it. Cleanser, somebody, it's at the top. Top menu, look for replay. Top menu. What in the haberdashery? Alerts, indicators, replay. Click starting point. Oh my God. Get out of the way. Okay, click starting point. Okay. I can't do it. Test strategy. I can't do it. It won't let you do it with the free one, I guess. It won't let me do it. Let me see. Top menu, look for replay, then replay toward top menu, look for replay toward the right side. It is at the top where it says replay next to alerts. Yeah, it won't let me. It said bar replay. That's what I did, but it when I clicked that. Oh, wait a minute. Did it do something? It changed back. See, when I do that, it do that. Now, what did I just do? Oh my God. Forget it. Forget it. I'm getting. Okay, hold on. Jump to. Oh my God. Forget it. Forget it. I give up. I give up. What it said? Make it full pay. Okay. I forgot you have a free account. I don't think it's available free account. Okay. I've tried before. It doesn't work during free trial. But okay, you got to subscribe. Yes. Okay. All right. Okay. I know. I mean, I might be slow, but I ain't that slow. So okay. Let's get back. Let's get back to where we was at. Friday the night. Back to where we was at. Okay, so like I was saying, wait a minute. Is this the 12th? Yes, this is the 12th, Monday the 12th. Okay, so like I was saying, all 3 times. God, okay, all 3 time zones. Is this the 12th? Monday the 12th. Sunday the 11th. Yes. Okay. So all 3 time frames are supporting up. All of them showing up. This one, this one, this one. All of them show up, and all of them eventually made a move up on Monday. Monday was the 12th. Yes. All right. So all of them show up with the DR, IDR, and all of them confirmed up, and all of them made a move up. I don't trade the Asian, so I'm gonna skip over that, move over. Now let's look at what's going on with the price action. We oh, you know what I didn't do? I didn't look at my higher time frames before coming in here. So let's block out our thing so we'll know where to go when I change this, and it's gonna jump. Hey, where did that come from? NASDAQ? How in the world? Like, oh my God. Okay. I hit something that put me on NASDAQ. I'm like, I knew these candles. That's why I kept saying, is this Monday? I knew the candles was looking different. You know what happened? I hit that doggone space bar. Yep. When I hit the space bar, it moved. Got to be more careful. All right. Act like you did this before, Tim. Second alternative is to note the date and jump, date and time, and jump to it. Thank you. What's up, Sanjay? Got me sitting backstage with no baby. Why you put him up? Did my wife get off? Calandra, are you still here?
Yo, Tim, you hear me?
I hear you. What's cracking, man?
No, man, I was trying to help you with the replay, but you figured it out.
Oh, okay. It's like I'm telling my sweetie to pull people up if they come in. She tells her, I'm here. No, you're not. But yeah, appreciate it, man. I eventually found it. You know I'm slow, man.
Yeah, but check it out, man. Yo, so there's something that that master guy that set this up. There is a way, or there is something he's trying to talk about now, where like even all the ODR, IDR, RDR, all of those are like you can tie them together like throughout the day. So
yeah, I saw one of them. I started looking at one of them when I was like, okay, I was like, he got the ADR, ODR, RDR. I ain't looked at all of the videos yet.
Yeah.
To figure out how, like you say, how to tie them together. But you know what I'm saying? I just know I remember him saying in the video where like sometimes they'll have respect for one another and be like a precursor to what's going on.
Yeah, so you can kind of get a little early vision of where it's going to go.
Yeah, a little early indication. And that's what I'm saying. Something about like if it move like a great deal, like before the range is done, that can kind of like lean to like the bias, but you still got to watch it to make sure it's gonna play out. But I saw that you was in his Discord. It like, what's up with the Discord? Is it like interactive, or is it
yeah, just... man, it's I mean, it's a pretty big, got like 7,000 people in there.
Oh, really?
But you know, it's a lot of channels, but the main one, a lot of people trying to figure out how to do it. So but then every once in a while you get some gems, like a lot of those live sessions he does. I get them from out of there, or people posting up just, screenshots with kind of explanations.
Yeah.
So if you want to, just to figure out kind of how to work it, it's actually a pretty good resource. I don't go in that often. I just go in there and see if anybody posted up something I want to use.
I'm not trying when I went in, I saw all them channels, man. I got discouraged. I'm like, oh man,
that's what I said. I ain't trying to read all that. So I just read that.
It's gonna make my head hurt.
It's just a couple. It's just a couple I look at real quick. Then I'm out. I ain't wasting time in there.
And I saw, like you said, I saw he did post some live videos. I think he called it Pillow Talk or something like that.
Yeah.
I meant to go back and check it out to see what was up with it, but yeah, I really want to get into this because just me going back looking through the data, you know what I'm saying? It looked like it can be game changer combined with like the ICT stuff.
So but you know what's funny, man? Like, I used to do like the 2:00, the London Open trading I used to do and get my little 10 points overnight.
Mm-hmm.
It basically was almost the same thing. Like I would always go by the range and then watch it kind of expand out of the range. And then I'll take the trade there,
Yeah.
So he just has a lot more rules to it. So it's right up my alley.
Yeah.
I was gonna say 5 minutes, which is what I trade all the time anyway.
Yeah, I was gonna say it's like it gives like a little bit more structure to what you was already doing.
Exactly. Yep. Because I take a trade and it might go against me, and I'm like, I don't know why, but all right, I just take my couple points and get out. But
yeah,
this one I've tested. Like I tested all last week, like literally every session, and I did it live. As it was happening, except for the overnight session, but the regulars day and the that's 8:31. I did all those, and it works, man.
That's what's up. Hey, Robson just gave us the whole video right there. It worked.
Yeah, no doubt.
Hey, but I'm glad you brought that up, man. It's like I just want to say, since you said that, for everybody that's listening or anybody that tune in later, it's always good to have something you can refer back to try to figure out the why. Like he just said, he was like, hey, I'll get a couple points in and then it'll go against me and I wouldn't know why. And it's like good to be able to have something rule based to go back, like in science class. No matter what science class it is, you have like the known variable, or you have the test subject, or you got something you can refer back to say, okay, when it did this, it went against the test this way. When it did that, it went for the test this way. If you got something to refer back to, then you can start to qualify the data. You know what I'm saying? And it's like, you be like, okay, now you start to get the statistics. Now you be able to build the statistics. Okay, every time, like he got his whole rules of, you got the DR range and the IDR range. When it do this, compared to the IDR range, now you got the statistical data to say, okay, he got it where it's 88% to the good if it do XYZ. You know what I'm saying? There's always gonna be outliers, but I take 80% any day. You know what I'm saying?
Yeah, no doubt.
But it give you something to refer back to. It ain't just, man, I get into the trade. Sometime it work and sometime it don't. You know what I'm saying? You ain't working off of probabilities in that way. You just like hoping and gambling. You know what I'm saying? But when you got something to refer back to, you know what I'm saying, you got a system. It's like you got a system, and I'm glad you said that, because it's like that's important to have a system. Now you was already doing it. Now you got some more structure to add to what you was already doing, and that's just gonna heighten your success rate. You know what I'm saying? And then give you a little bit more peace of mind and a little bit more understanding of why you pulling the trigger. You know what I'm saying? And give you more a more accurate, not accurate, but a better percentage as far as, you know what I'm saying, profitable trades. You know what I'm saying? Because now you got rules to follow, you got additional rules to follow that's already on top of what you already did. You know what I'm saying?
No doubt. Yeah. And I'm looking, I'm not trying to be greedy on it either. So like it go up, and based on how wide the range is, you get your 1R, 2R turn, and then I'm out. So I ain't trying to be too greedy on it.
Base hit. Shout out Wall Street Trap when he was talking about, don't try to hit the home run, get the base hit and get your Jackie Robinson on, steal second, steal third. You know what I'm saying?
And I got the perfect last name for it.
You would say that. Oh my man, I'm mad. I said that now. Man. Get on my screen. You got the words on my screen.
All right, bro.
All right, appreciate you, man.
All right, peace.
Yo, we say I can't come up live. My girl's house outside down right now. Oh man, it don't matter. I'm not logged in, but I'm listening. Yeah, I see that. What's up, Jay Foster? Trade of View at their own YouTube channel. Oh, they do? ¿Qué pasa? What's going on? I saw it this morning. Pillar Talk was fire. I got to go check it out. Yeah, so Robson already said it's been on point this week, but we still going to go through the price section. Let me go ahead and get back focused on how I'm supposed to be doing this right here. I need to map out my higher time frame stuff so I know what we messing with. Let me go up to the daily real quick. Let's go to the daily real quick and get our thoughts together. Y'all thoughts probably together. But hold up. Where did that box just go? Where did that box just go that I made? Oh, it's just a skinny line on the daily. Okay, I see that now. It's just a skinny line on the daily. That is why. It's just a skinny line on the daily. Okay. All right. So looking back there, we got this is Monday. We coming into Monday. So Monday's not. So this is Friday. Okay. So the down close candle. So that wouldn't be there. We went up. We filled in Friday. We filled in this fair value gap. Okay. So that's taken care of. Delete that. Move this over. All right. So fair value gap. We've traded up into it on Friday. That's taken care of. There's really nothing else up there that I would want to mark out. Okay, so Friday came up to there. Okay, so let's just mark out Friday's high and low. Mark out Friday's high and low. And then daily box top. Daily box bottom. All right, Friday's high and low. And then, yeah, there's nothing else within that range on the daily that I would want to mark out. Let's go down. Before I hide this real quick so I can see what are goings on. All right. So that's Sunday. 1400. All right. So that's the. Wait a minute. Why didn't it click on the top of that? What's that above that? That's weird. I put that right on the daily high. Oh, I'm looking at 4-hour candles. Let me move that back. Okay. All right, so 4-hour. I'm tripping, y'all. I'm gonna get my mind together in a minute, man. Nothing on the 4-hour. I mark out because we got that wick that run through everything right there. Get this out of here. Got that wick that run through everything. Nothing I want to mark out there. This is Sunday, 1800. We first open up. And that's 2 in the morning. Right there. Done there. Let's go down to the hourly on Friday. All right. So on Friday, right over the hourly fair value gap there on Friday. Oh, my snap not on. That's why I'm like, why ain't nothing clicking? My snap ain't on. Why y'all ain't tell my snap one on? What y'all talking about over there in the chat about the engagement story? Yeah, came down. You pass me a Sharpie. You said a Sharpie? Please. There you go. And packing something up. That packing something up. Packages or something. Marking out this order block. Marking out this order block. All right, so total disrespect for all of this right here. All right. All the fair value gap. Order block there. Order block there. All right. Turn my stuff back on. All right. So we go Sunday night, Monday morning right there. Can you woo woo woo? Stupid doo doo doo. It's mine. Oh mine. So we got fair value gap, got fair value gaps, order block marked out on the hourly. Now we zoomed in to 5 minutes because that's the time frame that the DR and the IDR is designed to work with. So looking at the London. We didn't mark anything out in the London on the hourly that we're looking at to trade. We got we're right there through the Asian. On Sunday we was right around, skated along the low on the opening up. Monday's opening, which is Sunday night, right? We skated along the low of Friday. Let me get that right because I didn't have my snap on when I did that. And so I want to make sure that's accurate. What in the haberdashery hemoglobin going on here? Yeah, see, it's not even on Friday's low. There you go. I'm gonna get my act together, y'all. Trust me. One of these days, I'm gonna get my act together. It always start out shaky like this. Okay, now there you go. So when Monday opened up Asian time, right here. So we opened up, and when the Sydney opened up, we still was flirting around Friday's low, right? And then when the Asian opened up, we had started pushing up into this 5-minute fair value gap right here. We pushed up, closed in our 5-minute fair value gap, pushed past it just a little bit, and then we started to kind of consolidate right around Friday's low inside the DR and IDR range. For anybody who don't know what the DR and IDR range is, got it from that dude. I hate calling him master. That just sounds so inappropriate, but that's the name that he got on there. I don't even know what his real name is, but it says master with a 7 as the T. But with the ADR range that he talked about, it start from 7:30 to 8:30, right? So from 7:30 to 8:30, the highest wick and the lowest wick from 7:30 p.m. to 8:30 p.m. That's the DR range, the defining range. And then in that same time frame, the highest body to the lowest body is the IDR range. I think it's like implied defining range. I think that's what he called it. And if you get a closure above the defining range, that's indicating a desire to go up. If you get a closure below the define above is an indication to go up, below is an indication to go down, right? So, and it's the same through all the ranges. You got the ADR, the ODR, and the RDR, which is regular defining range, overnight defining range, and I think is it Asian defining range. I don't know what the A stand for, but DR and IDR. Don't worry about the A, the O, or the R. DR and IDR. Now we kind of consolidated around Friday's low, a little chop suey throughout the Asian. I don't really trade that, but the IDR, we got a closure above the IDR, giving a early indication that it may want to go up. Then we got a closure above the DR on the 2335 candle, the 1135 candle, confirming that it want to go up. Right. Then we got a fair value gap retrace. We had a break in market structure, fair value gap retrace back to this 5-minute fair value gap on the 1215 candle, right? Kind of consolidated there. It can consolidate it in that same range, and then we got to move up. Was that a 10-point move from the top of the fair value gap? 39.6350. We need 39.7350 for it to be good. It didn't happen until the the London. It didn't happen until the London. But if you took it here, right, based off ICT teachings, your stop loss would be there. And that would be a successful trade coming from off this IDR and this DR IDR range. So that's one. Somebody keep score for me. One realistic trade that could have been taken. I would ask my sweetie to keep score for me, but she so let me do it like this right here. I'm open up me a spreadsheet. Open up me a spreadsheet. Let me see. Let's say IDR. IDR confirm. IDR confirm. DR confirm. See, we're gonna put think Tim. See, it's simple. Winning trade 10 plus points. You never know how to spell losing. That's how it's gonna be today. Losing trade. Stop loss hit. So on this right here. I probably should put this different. Okay, so we got this here, got this here. Winning, losing. All right. How do I want to do this? Audio confirm. I want to put the date in there, the day in there too. I want to break it down by days. I will need to think about this for a minute. All right. So, and then after that, we consolidated, took off. 2 o'clock, we inside the London kill zone now. Consolidated above. We consolidating right around the Asian high. No, yeah, that's the Asian high. We consolidated around the Asian high there. Came back down to a fair value gap and an order block during that consolidation. and then we pulled back down to that same area, took out the sell side liquidity up under here. But based off that entry, if you took that trade based off this entry, you would still be safe because your stop loss would be under there. This right here would have made you do the whole pucker a little bit right there, but we're not moving stops in here. We're not it's all or nothing. It's stop loss or profit, all or nothing. And I'm just testing it based off of 10 points. Right. So you do the whole would have got a little tight there if you took the trade back there. But we already, with the benefit of hindsight, we see that worked. Okay, now inside the London DR and IDR range, we got we chopping around a little bit right here, a little bit consolidation from 3 o'clock up until all the way up until 4:30, really. Just night still in consolidation, but inside that consolidation, we got IDR confirmation to the upside. So we got another IDR confirmation on Monday. That's 2. And then we got I guess I could just put this over here to the side like this, can't it? I just put this to the side right there. Do the whole right. I got you. Keep score of this. I appreciate both. I appreciate you, baby. I know you can keep score for me. I appreciate that here to learn share. But I got the spreadsheet so everybody can just stay engaged. I need to fine tune that spreadsheet one of these days. Since I made it, I need to fine tune it to do exactly what I wanted to do. But that'll work for now, just for this sake. What I'm doing here. Okay, so we got IDR confirmation and a DR confirmation. That's 2, right? So based off the London, we got a IDR confirmation here. We got a DR confirmation there. Yeah, but I don't see a trade setup that I would take off of this in the during the Asian. Let's check this out right here. During this time, right around this time of this confirmation, I don't see anything I would have taken right here on the 5-minute time frame based off of the DR or the IDR. Pure ICT concepts. Where are my lines? Okay. Equilibrium is the bottom of that order block. I forgot to mark that out. Okay, so nothing I would have taken based off of that. Equilibrium is way up there, so we're still in a discount. We're in a deep discount still on the time for on the day. So we'll be looking for reasons to buy based off of just discounting premium market, and the DR and the IDR is confirming look for reasons to buy. Right, it gave us 2 confirmations, had an entry off of the Asian confirmation over here right when we first got into the London kill, well, right before the London kill zone, which yielded a successful trade with the benefit of hindsight. We got a confirmation on the Asian, right? Still has not yielded an entry that I would take on the 5-minute time frame, haven't given me an entry. So we take off, ping out. We get the ping out. Just share the YouTube video. Okay. I check that in a minute. What was that link you just shared, Robson? What they talk about? So we went up around 5 o'clock. We got the ping out. We took off. We set an order block here on the 5 minute. These are 5 minute PD arrays, so I'm not bothering marking them. I'm just noting them out loud. If we was like 15, 60 minutes, like the 60 minutes are marked out. Everything I want to mark on the 60 minute is marked out. If it was 15 minute, I would probably mark it. But okay, so right at the 9:30 open, we got an entry, a fair value gap retrace. We got a breaking market structure, fair value gap retrace, based off of the London DR range, right at the 9:30 open. Right at the 9:30 open, we come down, gave you opportunity to get in based off the London DR open. We got a fair value gap retrace. If you got in at the top of the gap, 39.71, you would need 39.81, and that yields a successful trade. So that's two 10-point trades based off of DR and IDR success rate. So it's batting 100 right now. They got two confirms and 2 winning trades so far, based off of the DR and IDR combined with ICT concepts, because we in a deep discount, looking for a reason to buy. Got a 5-minute breaking market structure here. Fair value gap formed on the next candle. That's my trade. That it was set at 4:45 a.m. Traded back down to it at 9:35 on the 9:35 candle. Filled it. Looked like it tick for tick. Filled it. If you went off 50% of the fair value gap like me, it was 39.71. So that's a really small fair value gap. I must have got these candles stretched out. That's a really small fair value gap. But it came back to it nonetheless. Yielded a successful trade. Either entry type that you take, touch 50% or fill. It got all 3 entry types off of that. During the New York session, we it was kind of chop slop. I ain't gonna hold you. You did have a breaking market structure, fair value gap retrace on the 5-minute without the IDR or DR IDR confirmation. Just a typical came down, took out sell side. We took out the sell side liquidity, pushed up, right? Had a breaking market structure here and there. So 2 breaks in market structure, took out sell side, breaking market structure here. Fair value gap made, retrace back to it. And that yielded a successful trade, but that's outside of DR and IDR, right? But that is a successful ICT strategy trade. And then with the DR, you got another IDR confirmation and a DR confirmation on Monday. So that's 3 IDR, 3 DRs. So after the confirmation here, we got a fair value gap there. Never came back to. Chop slop. Moving into the lunchtime. Chop slop. Oh, breaking market structure. Chop slop. Nothing. No entry. Nothing I see I would take an entry on based off of this last confirmation. Based on this last confirmation, there's no entry that I would have taken. It did prove right, but there was no trade there for me. So for Monday, that's 3 confirmations on the DR and IDR, and 2 trades that could have been taken based off of my trade and style for Monday. And then after Monday afternoon, no trade that we did have a order block trade here at 215 based on, because we got this is an hourly fair value gap and a hourly order block right here. We just kind of poked above there and came back and touched it, but that's an hourly fair value gap. But so this little 5-minute move, that's like nothing as far as going above it and coming back to it, as far as making you want to take a trade. Plus, that's like going into lunchtime consolidation. And then once the lunchtime consolidation was over, we didn't take out the buy side, traded back down to an order block right here, and then took off. So for the after this breaking market structure here, right, and come back down, we failed to get that fair value gap. Then we consolidated. Then we took nothing in there would have made me want to take this. Even though it's coming back to an order block, nothing would have made me want to take this trade, because this is just consolidation. There's nothing that's just leaping out saying, hey, let's take this trade right here, because it came back to this order block, but it's just within this consolidation. It didn't give me a breaking market structure to the downside, didn't give me a breaking market structure to the upside. Well, I guess it did right here. You did have a breaking market structure right there. I didn't see that. I'm sorry. So you got a breaking market structure to the upside there, and then came back down to this order block right there. Yeah, so that's a clean order block trade if you take it on the 5-minute. You got a 5-minute breaking structure to the upside, came back down to this order block right there. So that is a clean order block trade. I wouldn't have been looking for it because I don't trade off the order blocks. I trade off fair value gaps primarily, but I watch the order blocks and anticipate them to support or reject price. So if you trade order blocks, that was a clean breaking market structure trade back. I'm fond of the breaking market structure retrace type strategies. That's what I'm fond of, because the breaking market structure to me is the market telling you that it want to go this way. It's a shift in sentiment. Like, okay, you know what I'm saying? We were coming down, we set a high, and now we've broken that high. I want to go this direction. I'm fond of the shift in sentiment. And then it just goes up the rest of the day into the night, the end of day. It pang out, took off for the rest of the day. Just rocking and rocking and rocking. Rocket man. Oh, 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 Rocket man. All right. Let's bounce off to Tuesday. Let's go off to Tuesday. Let's go off to Tuesday. Let's go off to Tuesday. Tuesday. So what I'm going to do, I'm just going to mark the daily high and low. I'm just marking the daily high and lows, right? And then go lower and mark out like the lower PD arrays. Anybody saying anything? Let me put the chat back over here while I'm looking in this direction, in case something pop in the chat, in case my sweetie get busy and she don't. Thank you, Roger. Okay, talk about the what's, and I appreciate that. Talk about the IDR and the DR, I think. All right. So we got the daily high and low. Benefit of hindsight, we see that it's, it took off Tuesday. What was Tuesday? What did we get on CPI? We got CPI on Tuesday. So with the benefit of hindsight, we see it totally took off to the upside. So just gonna go ahead and move this over here to Tuesdays. No, I'm gonna leave it there. I'll leave it there. I'll move it when it's time to move it. All right. Drop down to the hourly. Drop down and get your hour on, girl. Drop down and get your hour on, girl. All right. So here we go. Oh, that's Monday. Okay. Monday. I ain't gonna bother marking none of this because with the benefit of hindsight, we see we took off. All right. So okay, so this is the all right. So let's drop down to the 5-minute. Because with the benefit of hindsight, we see we took off. Now, looking at the Asian. Looking at the Asian. So the Asian, London, and New York, they all supporting each other. The Asian looked like it had mixed signals. It showed a down and a up. So we're gonna dig into that in a minute. The London supported the Asian up, and then the New York, the London showed a up. We had news, and then the New York showed a down. Okay, all right. So Asian showed up and down. London supported the Asian up and showed up. Then the New York showed down after the news. Okay, now let's get into it. Looking at the Asian, we on the Asian, we came in, we had a DR confirmation. We had a DR confirmation, no IDR confirmation. So we had a DR confirmation, right? Confirmation to the downside. Got a DR confirmation to the downside. Short term sell side taken out, traded down, just came down into that order block. God dog it. Oh, the candles adjusted so they won't pop up. Okay. Confirmation to the downside, push back up. I don't see nothing that I would trade here. We had a break in market structure that pushed back up above here to an order block. If you're an order block trader, that order block trade will have yielded you a successful trade. I'll go ahead and count that. Even though that's not my trade, I'll count that as a successful trade because it's combined with the ICT concept. If you came up, if you was an order block trader and you was looking short, you had a break in market structure, traded back up into this order block right here. Go short on that order block. Your stop loss would be above the high, right? That's a very clean entry right there. You hit like right at 50% of that order block and sold off. That's more than 10 points, I'm thinking. Let's check it. 24. You would need 14. No, it's not. So 14 is down there. Didn't yield the 10 points. So 24, you need 14. I'm not an order block trader, but that is a confirmation. Not 10 points. I'm going for 10, all or nothing. So if you took it, that would be stopped out. I said I was going to count it, so we're going to count it. And that's going to be 1 based off the order block there. All or nothing. Realistically, little Timmy Rogers, if I got all the way down here to 17, right? If I came from here and got all the way down to 17 down here, my stop would have been moved down to the bottom of this IDR DR range, That's realistically how I trade. But I said for this test, we're going for 10 points. Getting in a trade, all or nothing, right? That would be very heartbreaking to risk that little amount right there and be trying to go for 10 and get stopped out. That's why the reason why I say I would have moved my stop down here, because that would have been risking like 1 point, risking 1 point entering here 40, 24, 25. So that would have been risking 1 point, right? If you put it up there, risking 1 point to come all the way down here. Is that 24? Right, the bottom of it is 21. That's 3, and you get all the way down here somewhere. But anyway, I would have locked in there because, you know what I'm saying, for the risk to reward coming down here, I would have locked in there once it got past here and traded down that far. But, you know what I'm saying, I said 10 or nothing, so that's 1 and 1. Right? Come back. It gave a IDR confirmation for the long, a DR confirmation for the long. Just 1, 2. Right, DR confirmation for the long. You got a break in market structure, come back down right there, touch the top of that order block right there. If you take order block trades at the top of it, that's a pickup on an order block. You got a fair value gap right here. You got to pick up on the fair value gap during the London. You know what I'm saying? Based off of this right here. And does that yield 10 points? Top of the fair value gap. 22. Need 32. Benefit of hindsight. It does yield 10 points. 10 points off that trade. All right. So now we're at the Monday's high. Yes, that's Monday's high that we're at. Yes, we're flirting around Monday's high going into the London kill zone. All right. We got a breaking market structure right there. Come down. Got a you do got a breaking market structure to the downside, but it's just based off of this confirmation up. You're not worrying about it going down because you got a confirmation up right there. So you're looking for the buy. We're still in the discount. We're still looking for the buy based off of discount premium market, based off of the DR, IDR, everything's still in I don't know the word I'm looking for, but everything still agrees. He calls that retirement move when price confirms lower, then goes back up to the other side without breaking IDR. On that side, he takes the short at the top to run it back down. Oh, okay. Okay, so he take the short to run it back down. Okay, all right. Okay, yeah, I'm about to go. I'm about to dig into that to get the rules and regulations of it down pat. Get the rules and regulations of it to get it down pat. To know how to like trade it, how and when to trade it. Okay, so we over here in the London range, right? The London range has been set. Again, it gave you an entry based off of the Asian confirmation. At the matter of fact, that's at the close of the London DR range, right? It gives you the entry for the Asian upside confirmation fair value gap right there. That's the one for that trade that yielded 10 points. So based off of the London, again, we traded down, took out sell side liquidity, touched this fair value gap, took off, got a break in market structure to the upside, came back down to the order block, took off again. All right, came back down to this 5-minute order block, took off again, and never look back into after the news, after the CPI. Okay. We got a IDR confirmation and a DR confirmation to the upside. So IDR, DR, to the upside. So after the DR confirmation, we go up. We got the breaking market structure there. DR confirmation, we come back down to the fair value gap. Right there, you take the fair value gap, you stop loss. The way he do it, I think he put his stop loss below this right here. If I'm not mistaken, don't quote me on that. But the way I trade with the fair value gap here, your stop loss would be below the swing low here. Right, so you stop loss below the swing low there, entering on this fair value gap or entering on this order block right here. Either way you enter, that's a trade that yields 10 points. So I'm gonna count that. So that's a 10-point winner there, right there. So all right, we had a confirmation over here to the short that lost. All right. Oh, and then we had a confirmation here that won, and then we had a confirmation here. Oh, because I'm like, wait a minute, something missing. So 2 right there. I'm like, it's another one should be there. So we had a confirmation there that won, and then a confirmation there that okay, all right. So now I'm tracking now. Now I'm tracking. I need to. My math got the math. Loud bird. Loud bird. Okay. So we got a breaking market structure, gap fill retrace, and an order block retrace, looking for the sell. I mean the buy, and yielded more than 10 points. We had the news. CPI numbers came out at 8:30. CPI numbers came out at 8:30. Pang out. We took off. Had a crazy long wick. Then at 9:30, we had already started to sell off from CPI, starting the New York DR, IDR range. My nature sounds ain't too loud for y'all, is it? I know in the other video nature was naturing. My nature sounds ain't too loud this week, is it? How my nature sound, y'all? So we got the DR and the IDR range set for the New York. Again, the CPI took us to the moon, right? Took us to the moon. We blasted off. Appreciate that. Here to learn to share. So we went to the moon and back. We came back down. We pushed back down. We ran all kind of buy side. We know that. Start to pull back. On the 5 minute, we went down. We had a break in market structure down here. push back up into this fair value gap. I would have been watching this one, so I wouldn't have got picked up on this, because y'all already know whenever I have a fair value gap above and I'm looking to short it, I wouldn't have got picked up on that. And the reason why I would be looking to short now inside, even though we're inside like a deep discount, we're in external liquidity. We just took out external buy side, so we're in an extreme premium based off of yesterday's dealing range. Even though we're still, you know what I'm saying, it's like we're in a discount market overall, you know what I'm saying, we're still in an extreme premium based off of yesterday's range, right? Yesterday's range. So this would be looking for a short there, right? And so based off that, I would not have got picked up on that. Then we had another breaking market structure to the downside there. Just kept going, consolidated a little bit. We got a DR confirmation to the downside. We got a DR confirmation to the downside. This is Tuesday. Man, we still on Tuesday. Dude, they're racking up. We got DR confirmation to the downside. No IDR confirmation. Consolidate in there. Consolidate. Breaking market structure there to the downside. And then no trade. I'm not giving a trade that I would take at all. None of this price action warrants me to want to take a trade. So go no trade there. So that's 2, 3, 4. Yes. All right. So that's 4 confirmations. 2, 3, 4. All right. So 4 confirmations, 2 winning trades, 1 losing trade, 1 trade not taken. So 2 for 3 trades that day. 2 for 2 trades that day. And then out of the confirmation, got 2 trades not taken. All right. It's 2 for 3, 2 for 2. So that's 4 out of 5 so far. Trades that was profitable on there. All right. That Tuesday was kind of like based off just ICT concepts alone without the DR and IDR. This was a hot bowl of slop. As far as me looking for trades, this was a hot bowl of slop. Without the DR and IDR on Tuesday after that CPI, dookie, doo-doo price action. And then even once we got the confirmation, it was still doo-doo price action. This price action was kind of plooky to pooky on Tuesday. All right, let's look at Wednesday. Wednesday. Oh wait, Wednesday. Speaking of Wednesday, that was a nice little series. I enjoyed Wednesday. The series. When I was a kid, I used to have such a crush on Wednesday Addams. I thought she was so beautiful. That whole gothic, not smiling. She was so pretty, but she was so serious. I thought Wednesday Addams was so beautiful when I was a kid. I ain't tell nobody though, because I ain't want people to think I was weird. You're weird. You're weird. You got a crush on Wednesday Addams. You're weird. Okay, get out my way. Move. Get out my way. Get out my way. Get out my way. So Tuesday, 8 o'clock, we got an hourly fair value gap right there. Hourly fair value gap right there. Hourly bearish fair value gap right there. Move, get out the way, get out the way, get out the way, move, get out the way, get out the way, get out the way. Oh no, the fight's out. I'm about to punch your lights out. Get back, guard your grill. Oh no, you can't stay still. I've been drinking and buzzing too, and I've been thinking about busting you upside your forehead. And if your friend jump in, girl, now be more dead. All right, fair value gap there. We have this is Wednesday there. So hourly fair value gap there. We have a humongous order block there. I'm not gonna mark that out. It's too big to mark out on an hourly without enough of a thrust. Like it's technically an order block, but I like to see the candles like how big this candle is. I would want to see price come way down here before I be like, oh yeah, that's an order block right there. I want price to move farther away from the candle than that. This huge candle right there, this drop down there. Technically, that is an order block, but I would want price to fall further before I mark that out. Like, hey, look at this outlet order block here. So that's it. That's all I'm gonna mark for the hourly. We got the low, we got the high, we got that fair value gap there, and then started consolidating. This is Tuesday. Yep, that'll be it. So now let's go here to Wednesday. Let's go here to Wednesday. Check real quick. Oh, we got one right here. Oh, how did I miss that? How did I miss that fair value gap right there? Got an hourly fair value gap right there. How did I miss that? Hourly fair value gap right there on Wednesday. So, on Tuesday. Okay. All right. So equilibrium right here. Range equilibrium. All right. Okay, let's drop down to 5 minutes and look at it. 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 Wednesday. Right now. Look at it. Okay, so looking at Wednesday, you got an Asian with an upside confirmation. The London with a downside confirmation. We got a downside confirmation and an upside confirmation, both. And then we got the New York with an upside confirmation. We got a New York with an upside confirmation and a downside confirmation over here. All right, so let's dive into it. We are in a discount market on the day. We're from based off yesterday's trading range. We're in a discount market that's equilibrium from yesterday, and we're starting trading in a deep discount, right? So if I'm trading in a deep discount, personally, I would be looking for reasons to buy until proven wrong because we're in a deep discount. I like to buy in a discount, selling the premium. So if we're in a deep discount, I'll be looking for reasons to buy until the algo show me, hey, I'm still in a sale program, and then I will start looking for reasons to sell. But going into it, I will be looking for reasons to buy. What's up, Seawalt? So starting out with the Asian, which I don't trade, we got a DR confirmation on the Asian on Wednesday. DR confirmation for the upside. Consolidating. We got DR confirmation, push up, sell back down. We do have a order block retracement there. We got a fair value gap down here. We do have a retracement back to an order block on the inside. So, you know, that is a ICT trade that can be taken right there. So it's that order block consolidate we took off. So if you took it off the order block right there, 50% of the order block, 42.62, you need 72 to be a successful trade. Went up to, yes, that's successful trade. Upside by the skin of your teeth, right there, 50%, right there, going all the way up, right there, successful trade, skin of your teeth, by the hair of your chin, got up into that hourly fair value gap and rejected down hard, right? So you went up to the hourly fair value gap, rejected down hard. That can be taken as a breaking market structure, fair value gap, retrace back at this fair value gap right here, right? That can be taken for a sign of, hey, maybe we are still going down because we came over here, hit this fair value gap, we came down, we had breaking market structure, pushed up to that fair value gap, came down to this fair value gap, pushed back up, stopped at this order block, and sold off hard. Right, so we stopped at that order block, sold off hard. Right, got a breaking market structure, fair value gap, pushed up, did not get the fair value gap, consolidated, hit the fair value gap, and started to consolidate and come back down. So this right here during the Asian is that could be a breaking, that could be a fair value gap trade take considering to go down, even though we're in the discount market, right? This can be the algos proving, hey, I don't want to go up, but we can't see this yet. But you would start to keep that in mind. Why? Because we're respecting PD arrays above price, right? We're still in a discount, but above price is premium based off of where you are right now. So we're respecting PD arrays above price. So you start to look, say, hey, maybe we want to keep going down, even though we're in a discount. But that's during the Asian when I don't trade. So we're going to keep moving forward. London Bridge is falling down. Okay. We still consolidating pretty much in line with where the previous day had closed. We was consolidating that same area, consolidating. We got a confirmation, a DR confirmation. No IDR. Got a DR confirmation to the downside. So that'll be 2. All right. So we got the DR confirmation to the downside. We still consolidating right here. We still haven't broken away from price. Push back up. We've come up. We consolidated and then just came straight back up. It's not a trade that is not a trade that I'll be interested in taking at all, no matter what type of trade I am, because I like to look for the breaking market structure before coming back up to the peak. Well, right there, I guess you can count that as the breaking market structure right there. So that's the breaking market structure. Coming back up to this right here. Now, this gives me a breaking market structure to the upside right there. So this coming all the way back up to this PD array right there, that gives you a breaking market structure to the upside. All right, give you a breaking market structure to the upside. So we got the confirmation to the downside there, but since we came up and broke market to the upside there, that right there in my mind would nullify this right here. Right, that would nullify that right there in my mind. So I'm gonna mark that as a no trade. Even though we got the benefit of hindsight, I'm gonna mark that as a no trade because it's coming up. We got the breaking market structure here, right? Consolidated, and then we blew past this fair value gap, right? Blew past it, disrespected that fair value gap, and then got a breaking market structure to the upside. So little Timmy Rogers not taking that trade because of how we trading. So yeah, I'm gonna put that as a no trade. No trade. Even though I got the benefit of hindsight, realistically, I wouldn't take an order block trade off of this right here because the way we disrespected this fair value gap right here, we hit it consolidate. It's like we're not getting, like, we came below the DR, immediately went back above it, came below the DR again, consolidate tight next to it and got back above it, came below the DR again, immediately went back above it. It's like we fighting the DR right here. So, and not are we only fighting the DR, we, you know what I'm saying, we disrespected this fair value gap and got a breaking market structure to the upside. True enough, it came here and it sold off, right? But I wouldn't have taken that trade. I wouldn't have taken that trade because of the way I trade, even though, let me see, what's that? So from the order block, 59.25, you need 49. That would have been a successful trade. It would have been a successful trade, but I wouldn't have taken it. I wouldn't have taken it based off of how it was trading right there. All right. Got a DR. We got a IDR and a DR confirmation to the downside. IDR and DR confirmation to the downside. Came back to this fair value gap right there. That's the short fair value gap. Need 55. You need 45 to get the 10 points. There you go, 45. 45 said what you need to get the 10 points. 55.25. Oh, right there, just short 55.25. And that is a heartbreaking 45.75. 2 ticks of weight. Your stop loss will be there. You will 2 ticks and you are stopped out. 2 ticks and you are stopped out. Ooh, crushing defeat. 2 ticks and you are stopped out. Come back up. There's nothing that this would make me want to take a short of. We go up, got a breaking market structure to the upside. Nothing that make me want to take a short off of that. We sell off hard. Come down. This right here would have yielded a losing trade going back up into that fair value gap. This right here, that confirmed the down move, but there's nothing that is trading back into that I have marked out here that would have made me taking this trade right there. So the downside confirmation eventually worked, but entering off of this fair value gap retracement right there, Yeah, because you come down below this short-term consolidation there, which is very short-term. That right there would have been a risky Roger entry anyway, but it is a breaking market structure to the downside, fair value gap retracement. So that's why I took it, but it's all or nothing. So all or nothing, you stopped out, even if you put your stop loss here or above the consolidation. All or nothing, you still stopped out either way it go. And again, nothing over here that make me want to take the trade. We got a breaking market structure to the downside, breaking market structure to the upside, another breaking market structure to the downside. Then start to consolidate right before New York Open. Then on the New York Open, we run out short-term sell stops. Then we take off above, take out buy side, consolidate, take off again, stop at that previous fair value gap. Starting out the New York session, push up. Then we get DR confirmation to the upside. DR confirmation to the upside. And here, wick down after taking it out. Breaking market structure to the upside. Breaking market structure to the upside, come back down. Breaking market structure to the downside, come back down to this top of the fair value gap was support now because we broke through it. Now it's support. Now come back down to the support. Push up. All right, we had a breaking market structure to the downside. Push up there. So you got the breaking market structure, come up breaking market structure, fair value gap, retrace, order block, retrace right there. So because we got our confirmation to the upside. So there's our upside confirmation. So you take the trade. If you come off the fair value gap, you need 75, you need 85.25, successful trade. You come off the order block. Of course, it's a successful trade because the PD array above it. So that's another 2, 4. Wait a minute. Did I mark that? I thought it was one that was a bone crack. Did I put it in the wrong block? I think I put it in the wrong block because that was the bone crushing disappointment right there. I put it in the wrong block. So that's 4, 2, 4. Okay. All right. So 2 for 2, 2 for 1. I mean 1 for 1, 1 for 1. I mean 1 for 2, 1 for 2, 2 for 2. So that's 3. Let's see. 2, 4, 6. 2, 4, 6 trades taken. 1, 2. So that's 4, 2, 3, 4. So 4 out of 6 so far. 4 out of 6 so far for the week. And then went long up here. And then we dumped off. Had a confirmation to the downside at 1 o'clock. Confirmation to the downside at 1 o'clock. DR confirmation to the downside at 1 o'clock. Right now. So we got huge breaking market structure. Took out the low. Pushed back up. Hit the fair value gap. Hit an old fair value gap of support. So you came to the new fair value gap, to the old support, resistance. I said support resistance because this was the fair value gap from over there that we went through and we filled. So we got the wax on, wax off. So now we come back up to the old area of resistance now into that fair value gap. So that's a good breaking market structure because we came up before. We came up before. We've got the wax on, wax off here. Came back up to it here. It's acting as resistance, and it pushed price down. Right? We got the wax on, wax off of this one here. So this PD array already acted as resistance, as equilibrium. Again, I was talking about looking for reasons to buy until the algos prove you wrong, right? It's in the discount, but it's showing I want to keep going lower. It's respecting the resistance above price, respecting the PD arrays above price, consolidating. Then we push back up and we sell off hard. News or whatever it was that brought us down, but the algo showing you I want to go down. So we push down, have breaking market structure, fair value gap, retrace back to this fair value gap, right to the breaking market structure, right to an old area of resistance and sell off. That's a good ICT trade without even using the having the confirmation of the downside of the DR, but coupled with the downside confirmation, we got a nice sell off away from the DR range. Then we come back into it, and that's your short right there. If you took it off 50% of the if you took it off of 50% of the fair value gap, you need 56 for 10 points. That's well below that. If you took it at the touch of the fair value gap, you need 48. You need 38, and that's well beyond that. So that's another successful trade there. 3, and then we ride off into the sunset. So that's 5. So that's 7 minus 2. That's 5 out of 7 so far of the DR IDR confirmations and trades taken. So 5 out of 7 based off of trades taken. And then we got 3 no trades. So we got 3 no trades, 7 trades, and 5 out of the 7 based off of the DR IDR for the week, combined with ICT concepts and my trading style. Where we at? Thursday. Let me get a sip of H2O, and then we're going to do Thursday and Friday. Let me see if y'all saying anything in the chat while I get a sip of H2O, and then we'll look at Thursday and Friday. Y'all like my outdoor oasis? Y'all enjoying my outdoor oasis? What my birds sound like? What my outside sounds sound like? I appreciate y'all for hanging out with me on this Saturday. Y'all could be doing anything else, but y'all chose to hang out with me for a little while on Saturday and walk through this price action and look at the a new strategy I've been introduced to. I always look at the price action like this every Saturday. I usually do it early in the morning, like right before I eat breakfast. But since y'all want to hang out with me, I decided to do it at 11. I ain't ask nobody to wake up early. Baby, ask Chris if he took his medicine. All right. You'll bring me a bottle of water too, please? Oh, my birds and I got lower. Is that better with the birds? Did I turn the birds down too much? Is that better with the birds? Can y'all hear the outside better? Baby. Climb. when I was in Germany, we had to recycle. We had to recycle, and I stayed out on the economy, but it was I ain't live and I lived in government housing, but it was on economy, so it was all. Thank you, son. You took your medicine. It was all. It was like off post barracks. It was like off post housing. It was all soldiers in the buildings. Like I didn't have a German landlord where I had to go pay rent to them. It's like I stayed. It was like on post. It was, excuse me. It was a housing, but it was out on the economy. That's the best way I can explain it, right? Because in Germany, you have like housing that's off base, but it's all military. Never mind. It's all military. And then you got where you live on the economy, where you actually pay a German landlord and they give you a housing allowance to pay. But like if you stay in the government housing, you don't get that housing allowance, you know what I'm saying, to pay the landlord. But anyway, you have to recycle. And it's like the water bottles was taking up too much space in the recycling thing, right? So one day, one of the soldiers that I worked with, I saw him crushing a bottle and putting the cap on it. I'm like, why you did that? And he was like, because it be taking up so much space in the recycling bin. So ever since then, whenever I finish a bottle of water, I always crush it down and then put the cap back on, and it take up less space in the garbage can. It take up less space in the garbage can. Don't ask me why I just shared that, but I did. You know, we already outside, so if you don't want to hear me talk, I ain't even got the point at the door. You can just walk off. You hear me? Even the bird thought it was funny. The bird started laughing. Hey, let's get back to it. Hopefully the screen back up. Let me check it. Yes, it is. Okay, we on Thursday. We moving on to Thursday. Okay, yeah, we moving on to Thursday. All right. All right, mark Wednesday's high. Wednesday's low. Wednesday's high, Wednesday's low, Wednesday's equilibrium. Oh, did I put that right in the right spot? You better stop playing with me. No, I didn't. I was close. I was close. 44. 2 points off. I was 2 points off with that. Man, that calibrated eye getting good. Hey, y'all the birds getting loud now. Y'all off the chain. Tim, do the same thing. Never get. Tim, I do the same thing. Never get the bottle that small though. Yeah, I just crush it down. These bottles easier to crush. These are like if you got like a Aquafina or a Dasani bottle, man, you'll break your wrist trying to crush those. Those ain't gonna get that small. Like Aquafina, Dasani, but these are great values. The bottles already like kind of scrunchy, so they fold up real good. But like Dasani, Aquafina, them ones that don't have them ridges on it, man, you'll break your wrist trying to crush those. They still be all big. It, like when you, I even do it with like milk, like the big Fairlife milk, the little Fairlife milk containers that I drink out of, the little half a gallons. I crush them down full as I can, but those don't fold up like that. Okay, all right. Daily wise, let's look back. We got a couple days that we going on here. I just noticed, right? If I'd have been paying attention after Tuesday, when we did Tuesday, I should have marked out this daily order block. And as you see, we traded down to that daily order block on Wednesday. We came down to that daily order block on Wednesday. I didn't mark that out. I missed that while we was going through the price action, right? I should have marked out like coming from Tuesday, I should have marked out this order block right there, because you know what I'm saying, we've pretty much doubled the size of that candle. So that's what I like to see. I like to see a big move away from the candle. Like I was talking about over here, this is a big candle here, and we moved down. Technically, we broke through the bottom, so technically this is an order block. But the size of this candle, I would want price to come at least down to here before I'll be like, hey, look at that order block, like twice the size of the candle. Price will need to come all the way down to this pretty much this 38.70 down here, 38.6350 actually, before I'll be like, okay, let's mark out that as an order block. Now, so I should have marked out this order block, and as you see, price did come back down to that order block. I don't know if it touched it or not. What's the low on that candle? 3997 even, and this candle opened up at 3996.25. So it was like 3 ticks away from touching that order block. Yeah, so all right, so let's drop down to Thursday. We got Wednesday marked out, Wednesday equilibrium marked out. Drop down to Thursday. Let's go down to the hourly and see if there's anything I want to mark. All right, for Wednesday. All right, so that's filled in. Nothing I want to mark there. Yes.
I'll be back. I'm about to run up to the store real quick.
You going to Walmart?
Second and Charles.
Oh, Second and Charles. Okay. All right.
All right.
See you later.
Love you.
Love you too. Never mind. She wasn't listening anyway. She left. That big gap was filled in by that was Powell, and then the retracement. Yeah, I remember that Powell. I mean the announcement, Powell retraced again. Okay. So nothing need to be marked up there on the hourly. Just look back a little bit, see if it's anything over here that we need to pay attention to. We have a slight fair value gap that's not all the way filled in there. Let's go ahead and mark that out. It's not all the way filled in there. Push that out through time on the hourly. All right. The fair value gap is filled in. We got nothing. All right, and it's going below the lows. I don't want to go back no further than that. Okay, so now let's go look at Thursday. Let's go look at Thursday now on the 5-minute. That's all I want to mark out on the 60-minute. Ain't a whole lot to mark out on as far as fair value. I mean PD arrays. Throughout the week, it's been real slack as far as marking stuff out. Thursday. It's been real slack. Okay, so at the open, at Thursday's opening, we're right around equilibrium, consolidating just below equilibrium. All right, we start out the Asian range. We're chopping. We're just chopping like down, up, right around equilibrium. Left off Friday. Came down, had a breaking market structure. Got fair value, got retraced, that sold down. Right, once we sold down, we came down, had a breaking market structure there on the 5-minute. Breaking market structure to the downside, came back up to equilibrium, and a fair value gap right there. So we got a breaking market structure to the downside, back up to equilibrium. Right, still not have taken out this low right here. Right, we went up, We came down without taking out the low, went back up to equilibrium. So since we have not taken out this low, right, that low need to be taken before start looking long. Even though we're in a discount, we still have not taken out a low, so that low need to be taken out before I start looking at a long. All right, now chopping around, consolidating, get into the range. The range, we get a confirmation, we get a DR confirmation to the downside. So Thursday, we got a DR confirmation to the downside, no IDR confirmation yet. So DR confirmation to the downside, nice distribution away from the DR range. Come down, uh, not to any PDA or anything like that. Did take out short-term sell side. Consolidate. We got this breaking market structure here. Come back up to this fair value gap, sell down, consolidate a little bit, push back up to the same fair value gap, sell off again, going into the London kill zone, right? So we do have ICT breaking market structure to the downside with a sell off that was successful. But if I was up trading this going into the London, I wouldn't have got picked up because there's a fair value gap above it. And I always wait. I don't take it on the bottom one. I always wait for the one above it. So I wouldn't have got picked up on that. Still for the DR range, I have no trade based off of, with the benefit of hindsight, I see there's no trade based off the confirmation for the, no. I'm lying. There was a trade there, but I didn't take it right there. I didn't get picked up. So no trade. There's your confirmation to the downside, breaking market structure, fair value gap, retrace right there. But I wouldn't have got taken. The same ICT setup that I was talking about is the same setup based off of the DR range, but I just wouldn't have taken it. I would have taken it, but I wouldn't have got picked up because I would have been at this fair value gap up here. So that's one confirmation. It did yield a successful trade, but I wouldn't have been in it. Right? I wouldn't have been in it. I probably should have been keeping track of the ones that I should have been keeping track of the ones that did yield a successful trade, but I wasn't in it. I probably should have been keeping track of that too. But I'm just tracking it for my trading style, so who cares? Actually, I do because I said it. Okay, so we had a sell-off, a mean sell-off going into the London, right? So we got a mean sell-off going into the London. Came down and eventually took out the sell side liquidity, right? Eventually took out the sell side liquidity going into the London. Okay. So going into the London, we take out the sell side liquidity. And in the London range, we got DR confirmation to the downside. So still don't have no IDR confirmation yet. So we got the DR confirmation to the downside with no IDR confirmation. We come down here, we got a ICT trade of breaking market structure to the downside, fair value gap retrace, right? We came here with this consolidation right there. That's your pause. So right there with this pause, right? I'm not looking for this liquidity void or anything in the short term, right? We came down, we got this pause, and then we got a fair value gap after that pause. So I'm looking at this fair value gap to be serviced with a sell-off before, like coming back up here would be like a higher time frame look back to come back that far, because we had that pause there. We stayed there for 5, 10, 15, 20 minutes. We consolidated there for 20 minutes. So that's like a pause. That's the lightning bolt going to the downside. Right there. Y'all remember that? So boom, back up, right? Go back to equilibrium of the IDR range right there. So boom, that's a short you can take based off the IDR, because you got the oh no, that's before the confirmation. So ignore what I said. This just the ICT setup. breaking market structure there, fair value gap, retrace, right? Sell off. That's not based off the IDR. That's just the ICT setup. I was talking about breaking market structure, retrace back to the fair value gap. If you come off the bottom of the gap, you got picked up. 50% of the gap, you didn't get picked up. Full gap, you didn't get picked up. So first touch, got picked up on that trade. Okay, confirmation. After the confirmation, came back up. You got a breaking market structure, confirmation, fair value gap, retrace, come back to the fair value gap. It dilly-dallied, right? But did it yield a favorable trade? I'm just gonna go to the top, and if it yielded for the top, it yielded it for everybody. So from the, I'm gonna go from the bottom. If it yielded for the bottom, it yielded for everybody. From the bottom, you need 81 for it to be a favorable trade, and yes, we got well past 81. So that would be a winning trade based off of the IDR. So you have a normal ICT, breaking market structure, fair value gap, retrace, entry. If you go off the bottom of the gap, you got picked up. If you didn't get picked up on that one, you had a second chance for a breaking market structure, fair value gap, retrace, and you did get picked up. So with the normal ICT strategies without the DR, if you go in on first touch of the fair value gap, you had an opportunity to add on to your position here, another opportunity to add to your position there if that's your trading style. If that's not your trading style, you didn't get picked up here, you had opportunity to get picked up here. If you didn't get picked up there, you had opportunity to get picked up here. All right, couple opportunities to get picked up in this area right over here. That was a pretty good day for shorts right there during the London session. It gave you a couple opportunities to get short. Going into the New York, we start to sell down, consolidated just before the New York came in. Right at the open, it went ham, came up, took out these equal highs, came into this now resistance. What used to be a fair value gap, it's been waxed on, waxed off, and now it's hit it as resistance. And we sold down, baby, Yo Street in the Range Rover. After that, we got a breaking market structure to the downside, fair value gap, retrace. If you go off the touch of the fair value gap, you could have got short there. Little Timmy Rogers would not have taken this, and y'all already know the reason why, because the risk to reward for taking this fair value gap trade is way up here, right? Your fair value gap is here, the swing high is there. I wouldn't have took that, but it does exist for anybody who just take any fair value gap. They take the fair value gap and give it to the candle above the gap. That's a strategy too. You don't have to go all the way back to the swing high. You can take a fair value gap and just give it to the top of the gap. That's just not my strategy, right? We got a DR confirmation to the downside. That's 3 confirmations for to the downside. We got a nice sell away, right? Nice sell away. Didn't get back to the fair value gap. Sold down again, came back to the fair value gap, right? Boom. So we got you take the trade off this fair value gap here. What time is this? This is at 1500. This is pretty late, but it is a trade. It is a trade at 1500. It's pretty late, so I'm not gonna take it because it's at 1500. But going from the bottom of the gap, you need 24 for it to be a successful trade. That is a successful trade. So everything else is. So that is a successful trade based off the DR IDR, but it's after 1500. That's against my rules. So I'm gonna put it down as a no trade, but that was a successful trade. It was a successful trade. So 2, 3, 3, 3, 4, 5, 5, 2, 4, 4, 2, 3, 3. Okay. All right. So, and then moving on to Friday. Let's move on to Friday. Moving on to Friday. It's Friday, and I'm ready to play. Ready to hang. I don't know what's that when I'm ready to play. It's Friday, and I'm ready to hang. Pick up my girls and hit the party scene tonight. Oh, it feels alright. Mm. 97.50. 75.50. Where did I get that from? Where did I get 97.50 from? Okay, so on daily, we got a daily order block down here. Daily order block. Oh, my light done died. We done been out here for a long time. My whole light done died. How long we been on here? What time is it? Oh man, we've been on here over 2 hours. It's after 1 o'clock. Oh man. Man, 2 hours and 11 minutes. We have been on here over 2 hours. Whoa. My bad, y'all. I'm finna get it. I don't mean to hold y'all all day like this, man. I'm sorry about that. Let's go ahead and get through this. Let's go ahead and get through this because this is crazy long. Okay, so we got the order block marked out. Okay. Got a fair value gap there that's not quite full. Even the birds done got tired. All right. So we got fair value gap up here around equilibrium, but with the benefit of hindsight, we see we didn't go down there. So I'm not going to mark it out. After just for the benefit of time, we done been on here. We out here. Been out here for a long time. So I'm just gonna kind of rush through this last part. Thursday, 1800. So let's see. A small fair value gap there. A small fair value gap right there. See. Just marking out everything that we would have come to right later on. Like going throughout the day, just marking it so that yeah. Oh, yeah. Came down there. And that order block there. Right there. So this low. Look down. Then break the high. See these weird ones right here. How's this? So took off, had an order block there. Right here, right there. Right there. Yeah. The ones that be in the middle be kind of hard to see sometimes. They be kind of hard to see on them tight little on those tight little areas like that, it'd be kind of hard for me to see sometimes. It'd be like in a tight little range like that. I can see it better on a lower time frame, like this order block right here. You know, you got the bullish order block, then it turned to a bearish breaker. You know what I'm saying? But it'd be kind of like when it be in this consolidation like that, it'd be hard for me to see it. You know what I'm saying? But I can see it better. So we got a lot going on in that area there for later on. So Asian. All right, so within the Asian consolidate, and we got yes.
Do I watch this with white?
Watch what with white? No. You watch it with light colors.
Right.
You ain't got no light colors?
Kinda. It's all like 2.
Okay, just throw it in our hamper. So we got a confirmation. Got a DR confirmation during the Asian Friday. DR confirmation Friday. We go up, breaking market structure right there. Fair value got retrace right there. ICT setup. Take it off the top of the gap. 28. You need 38. Need 38 for it to be a winning trade. Go up. Nope. It's not. Come down. You're stopped out. So that's losing trade. Right there. Sell down. We got an IDR confirmation and a DR confirmation to the short side. To the short side. 1, 2. Right. So IDR confirmation. So we went up, kind of chopping around, coming down. Let's zoom out a little bit, see what we're doing. Okay. We're still in the discount. Equilibrium is up there. We're still in the discount market. All right. We had a break of market structure, came back, stopped at the fair value gap, came up. Fair value got retracement right there. So based off of what the price action doing, this right here is, if you're going to take this long based off this, just little Timmy Rogers thinking, looking at the zoomed out price action, if you're going to take this long based off of this confirmation, right, I would only take it up to the top of this fair value gap, which is not a 10-point trade, right? Because the fair value gap is there and we're on a breaking market structure, retracing back up to that fair value gap. So realistically, I wouldn't take this trade, but since it was a confirmation and it was a ICT setup that I trade, if you would have taken that, that's a confirmation and a trade setup. So that's why I put it down, and it didn't yield what was needed for the 10 points. All right. But looking at price action, this long right here wouldn't have made sense because we had a breaking market structure to the downside and we were just coming back up to the fair value retrace right there to go short. It's this right here is against the bias. The bias is to the short side, and this is giving you a up confirmation. So that's not a smart trade to take because the bias is to the downside coming into this trading session right here. So we got a confirmation to the downside on here. We go up, come up here, blow through, well, we didn't have nothing to go to. Get to the top of the range. Still, it's going long here. It is going back to the upside here, but you got your confirmation to the downside. Pushing up, pushing up, pushing up. Right there, you got a fair value gap. Retrace right there. So that it's a small fair value gap, but it is a fair value gap. Retracement right there. Got your confirmation to the downside. Retrace back up to the fair value gap. And I can see that they yield more than 10 points. So that's a winning trade right there. 2. So that's a win trade based off the breaking market structure. You got a breaking market structure right here. Fair value gap, retrace, right? Got the confirmation here. Got the confirmation to the downside here. Push back up to the fair value gap, retrace, sell off. All right. Coming into the London, we consolidate a little bit and then start to sell off going into London. We got an order block up here. Right there at the DR range. I'll just use the DR range to know that that's an order block. Coming into the London. We keep selling off going into the London. We right there we form that hourly we trade through there, make that hourly breaker right there. We got a nice liquidity void here. We got, yes, we're still selling down. We got a nice liquidity void here, sell side imbalance, consolidate there. We got a DR confirmation to the downside, going into the London. DR confirmation to the downside, that's 3. We come here, we fighting here. We pop below, we pop back above, we pop below, we pop back above. So this break here, fair value got retraced there. That's not a good trade right there. And when it's inside this consolidation, it's a breaking market structure. Fair value got retraced, but you're fighting the DR range. You're fighting the support. You're fighting the swing low, right? Just not even considering the DR range. You're fighting the swing low where you break below the low, push back above it. Break below the low, push back above it. It's like you're fighting this range right here. You ain't got a good sell-off and a good return yet, right? So finally push down, and we push down, we come back up to that fair value gap, push down a little bit, and then we still in this weird fighting range, right? We're still in this weird fighting range. Let's look a little bit farther left. It's too far back to see anything, but yeah, we still in this weird fighting range. So we finally get back up. Boom. Here we go. We come in here. All right. We do touch the fair value gap here, but again, the risk to reward on that's so far up that don't make that a realistic entry, right? So we get here. All right, we didn't make that breaker yet. Oh, this right here is that's a fair value gap, I think that was. All right. So took out temporary sell side and we took off, push up, making that fair value gap. They get all the way up, boom. There you go, back to you. This is the one we was looking at Friday. This one was looking at Friday when we got the confirmation to the downside, and I was saying I want to see if it come back up to this fair value. I just thought about it. I said I want to see if it came back up to this fair value gap right there, and boom, There it is right there. Come back up to the fair value gap right there and sell off. So from this confirmation to the downside, there's your fair value gap sell off right there, which was a successful trade. So that's 2, 3, and 3. All right. All right. And there's still with the ICT trades, you got a sell-off, hard sell-off, come down, come back up into this liquidity void right here, fill the liquidity void in, and a fair value gap. Then you come down. There is a possibility that let me see, you could have got a little scalp here, right, to ride it up short. Matter of fact, I tried to get in this. This is what I tried to get in, but this is the one that missed me, right? When I was trying to scalp out, them 10 points going up there. This is what I tried to get in right here. I just noticed that again when I was trying to get in and it didn't pick me up. I was trying to scalp on this fair value gap right there to get a quick 10-point scalp. That was the other ICT. That's the one Robinson was like, I ain't interested in that trade. Right. And then so we come here. We got a DR confirmation to the downside. DR confirmation to the downside. Right. We got a 5-minute fair value gap here. We've set this breaker now. We've come down and we've traded back down through it, set the breaker. Right. Yeah, see, it's easy to see on the lower time frame. You got the high, broke the low. Well, the low broke the high, or whatever it was. However, I'm looking for it. Yeah, y'all know what I'm saying. You got the breaker right here. Whatever it is, I don't know how to look for the high, the low, the high, but I just know when you got the what's the name? You trade back through it. The low broke the high, trade back through it. Boom, there you go right there. Low broke the high. There you go. So you got a breaker in here somewhere from that other time frame. And then we come down, we got a breaking market structure. We got a fair value gap, got another fair value gap on top of it. We consolidate. We already got our confirmation. Nothing here. We in the consolidation. We still fighting with the range. Break below the range. Still consolidating. Right here, this right here, we still consolidating. This is tight. This is lunchtime anyway, but this ain't no real entry confirmation. Everything is still like choppy. Hit this order block, start pushing back up. We got a breaking market structure to the upside. Come back down. Don't get that fair value gap. Take off. Matter of fact, this one price was leaving me when I was trying to get in. I tried to get in on a turtle soup. Then that's when price started leaving me. Came up, didn't give me a clean entry nowhere. Got back up to that breaker, hit that breaker, and then started selling back down at the end of the day. And that's that. And that brings us to the end of the day. A little chop slop at the end of the day. Nothing to write home about. It did give you the eventually gave you a short at the end of the day based off this confirmation. It came up here to this breaker, up to this fair value gap. And it yielded 10 points. So I put a 3 down. It yielded 10 points. No, wait a minute. That's after 3 o'clock. So that'll be a no trade. Even though it was successful. All right, let's look at the breakdown. So we had 19 confirmations. What didn't I have a dash? Oh, it's gotta. All right, let's try it now. So all right. So we got 19 confirmations, 10 winning trades, 3 losing trades, 6 no trades. So out of 19 confirmations, we took 10 and didn't take 6 and lost 3. So that should equal 19. Yes. All right. So let me try to figure out how to do this math real quick. Let's see. DR, IDR, confirm taken, win rate, okay, so let's say confirms taken. So let's say equals. So it was confirmed, took 10. So let's say it's equals. Let me see. Think, Tim, think. So I took 10 out of 19. So how can I do this with percentages? Let's see if this work out right. This divided by this. Did I do that right? Yes, I did it right. So 10 out of that, that's 53% taken. All right. Confirms not taken equals this divided by this. 32% not taken. All right. Equals. So now it'll be, is it this? This. No, it's not. Let's do it the other way. Equals this. Let's try this. Equals this minus this divided by this. There you go. All right. So, all right. So, based off of what I just went through and based off the realistic things I would have taken this was so took 53% of the recommendations. So took half of the recommendations as actual trades. 32% of them didn't take a trade because of my rules, right? And then based off of what I would have taken, based off of all or nothing, it was a 70% win rate for the week using the DR IDR, which ain't bad. And my phone just died. The bird's ready to go. I guess we're gonna call it with the birds ready to go. I can't believe 24 people still on here. Y'all y'all the real MVPs. Y'all the real MVP. So based off of 70% based off this week's price action, based off what I really would have took if I was up during them times, what I really would have taken. That's over all of it. But I didn't even break it down. Like I could have broke it down between the New York session, what I actually trade. I think the next time I do something like that, I might break it down between New York and London and all that so I can see the time I actually trade and see what the percentage is for the time I actually would be taking them trades, because all of that play into effect. Like, you know what I'm saying? Like if, let's just say if I only took the New York trades and just say with the New York trades, I don't think the New York trades had any failed trades. I don't think it was any failed trades on the New York. The New York, that was one. On the New York, that was good. That's not New York. So that was the New York right here. This was the New York right there. That was good. That was a confirmation that was good. That's two. This was the New York here. Came down. That was three. The confirmation to the downside. That was one there. Oh no, I didn't take that one. But that was one. This was the New York here. That was a confirmation. That was one right there. And then Monday is confirmation to the long side. And that was one. So New York was 100% for the week. The New York on the week was 100%. The New York by itself. If you took every one, which was a recommendation. So with the New York, it was come here. So I'm just doing New York by itself. New York by itself, it was 6, 5, 5, 1. How do you make this? Divided by that. Okay, so this is just the New York. So what I just went back and looked through, because it was one that I didn't take. It was I think it was 6 recommendations, 5. I know it was one I didn't take. So maybe it was 5, 4, and 4 right there. Okay, so that's the New York, because it was 5 days and it was one I didn't take. So 5, 4, and 4, and 1. So with just the New York, it was 80% taken. I took 80% of the recommendations. didn't take 20% of the recommendations and got 4 for 4 for 100% on the 10-point trades. So for the New York session by itself, last week it was 100%. And if you traded every single session, Asian, London, and New York, and took all the recommendations, then it was 70%, which yields to the fact of less is more. Less is more. The more trading you do, the more you open yourself up to bad trades. Less is more. New York session took 80% of the recommendations and yielded 100% success rate. And then during the New York session, this actually was 5 out of 5, but because of my rules, one of them trades I wouldn't have taken because it was after 3 o'clock. I ain't mad at it. That's very good. And you're very welcome. You're very welcome. So 70% if you try to trade every session and taking the recommendations, 100% if you only traded the New York and took 80% of the recommendations. And at the end of the day, less is more. That's what you always hear the trading community say, less is more. And this little walkthrough has, confirmed that. I ain't gonna say proven it. It has further confirmed it. Less is more, and looking for, more highly probable setups. I appreciate y'all for hanging out with me, man. We've been on here for over 2 hours. I ain't gonna hold up no more y'all day. What's tomorrow? Sunday. The chart, weekend chart prep for tomorrow. Y'all enjoy the rest of y'all weekend. I got to go charge my phone. My phone completely dead. Then all my birds gone. Since my birds gone, I go back. Let's go back in the house. Since the birds gone, let's go back in the house now. We back inside. Hey man, I appreciate y'all. I'll see y'all tomorrow at what time we do it? 3 o'clock? Is it 3 o'clock we do it? What time we do the weekend chart prep? Is it 3 o'clock? I can't remember. Babe, what time is the weekend chart prep? You still on here? What time is the weekend chart prep? What time do we do that? Is it 3 o'clock? I know my sweetie probably ain't on here. She probably gone. Three. Okay, 3. Okay. Hey, look here, man. Look here, man. Hey, I appreciate y'all, and I'll see y'all tomorrow at 3 o'clock. Until then, enjoy your family, man. Enjoy your weekend. I'm gone.